This is our Forex blog for April 5th, 2011. And like most days, we really want to trade the strong pairs against the weak. You can see that the dollar and yen both have a daily, weekly, monthly trend that's down. The yen is weaker than the dollar, which you can see. Darker red means weaker. It had brief amounts of weakness followed by a little bit of strength. The weakness continued, and when you see weakness and the strength, the pullback, not very strong in comparison, usually if the weekly, monthly, and daily trends down, you want to anticipate weakness coming back, and that's what normally happens. Again, later today, the yen was extremely weak, weaker than the dollar. We had an incredibly strong pound today. The daily and weekly trends up, the monthly is just slightly down. I focus mostly on the weekly, but if you have incredible strength like this, you don't want to be selling the pound. The pound yen, especially after 8 o'clock. Let's look at that on the chart. Here's 8 o'clock. The market's not above the upper containment band at that point. It's been going sideways for a couple hours. Basically, we look for strong momentum moves, and then we have two entry methods. We have pullbacks, which, here's a pullback trade. Broke out, went higher with a lot of momentum, and then you have a pullback. You wait for it to pull back, usually 10 to 25 or 35 pips. And as soon as the trend line on the downtrend, gets broken, you get back in. The trend's up. It just broke above the previous day's high. This is an added no-brainer trade because resistance areas like the previous day's high, it couldn't get above there yesterday. Today and last night, it couldn't get above there. But what it did, it shows that there wasn't any sellers there, or it wouldn't have broke through it. When it comes back down, this resistance area becomes support. That's a key in a very low risk, high probability trade. It works way more than it doesn't, and when it doesn't, you risk a tiny amount. And as you can see in this case, even if you got out of this trade up here when it went sideways, you made 75 pips while risking 10. That's even if you got half of that move, that's 3.5 times bigger win than your risk, and that's really the key to trading. Now, this was an explosive move and it wasn't up too much. Some traders might have bought this little flag pattern right here. We have another tool called the FX Momentum that shows you on a bar by bar basis how strong or weak each pair was. Here it is, FX Momentum Pro. And when you look at this tool on that rally up, it really will let you see that the market was incredibly strong at that point. Let's scroll back and watch this. There really wasn't that much momentum on the first move. It broke out right here. Incredible momentum. Way more than 3 times more volatility than normal. And you can see the momentum is coming back up. If you bought this trade right here and you see it going up with less than average momentum, which is a white line, you might consider getting out with a 5 or 10 pip move. But when you see incredible momentum like this, usually those trends continue. And you can see it's inching its way up with less than normal momentum for this time of the day. Counter trend sell signal. But you might not have taken this trade normally. You're in the trade around 78. It went up to the whole number. You made 20 something pips. You may decide to hold on to the trade. Usually I tend to get out at whole numbers, wait for a little bit of a pullback or a sideways consolidation. As it's going sideways right here, notice not a whole lot of weakness, which adds to your probability if the market breaks above that whole number up here. The longer it goes sideways without going underneath this level by too much, by 5-6 pips, no more, boom, you're in. Now look at the momentum as it's going up here. It's not really that much. You're up 20 pips in the trade. Now the market's taking off. If you see a lot of momentum come in, towards the end of the move rather than at the beginning, oftentimes that's an exhaustion bar. So I'd exit my trade, or at least half of it here. We're up 40 pips. Take half, and you can see, look, it pulled back, 15 pips already. It's kind of going sideways right there. So that exhaustion bar, kind of was the end of this move. You always want to buy strong pairs versus weak. And you can see the CAD is extremely strong too. Daily, weekly, monthly trends up. So you could have done the same thing with the CAD yen. Buy the strong CAD versus a weak yen. And again, when prices are above the hourly, they're more likely to go up. When prices are underneath hourly, they're more likely to come down. This is another example of a retest. The support, the hourly moving average, once broken, becomes resistance, and when it can't get above there, that's a sign. You have the exact same thing on the opposite side here. It broke above the hourly, came down, retested. You might have bought right here. That trade didn't really pan out. Came down to the hourly again without that much weakness, and when you got in here, it just took off. And you had incredible momentum on this part of the leg right here around 9:30. So if you got into this pullback, the previous day's high and a weekly pivot level right here are support. Slightly went underneath the previous day's high, hit support here, went back above. You get in your trade here, and here's a Fibonacci retracement level that I calculated the night before, which is very high probability sell area as price comes up to it from underneath. So it's a good place to get out. You're in around 50, out at 80 for 30 pip move. And if you bought this trade right here, that's a decent trade. Here was an area that was the highs, and when it broke out of here around 9, pretty high probability. This is your first, second, third profit target. Shot through the first one, second one, kind of ran out of steam right here. You're out. You buy the next pullback and you make another 20 on that wave up. Now earlier today the euro was extremely weak, but the daily, weekly, monthly trend's up. Same thing with the Swiss, but its trend is down. So not many of us trade the pound Swiss, but the pound Swiss is going to be one of those pairs that's going to rocket ship up, and you can clearly see that. Notice that this was kind of underneath the hourly yesterday, and for part of today, when it broke this high, it just took off. You had a little bit of a pullback here that went up, pullback here that went up, pullback here that went up. Notice the strength on the up moves is always more than the weakness on the pullback move. That's one way of using our FX, Trend Intensity Pro. The New Zealand was again very strong today. So the New Zealand dollar, New Zealand yen, are likely to go up. There's a New Zealand dollar, didn't really go up that much. Here's New Zealand yen. Anytime you see a currency go sideways for even 2 or 3 hours, the longer the better. When it breaks out of here, it's pretty likely to go to the next resistance area, which is up here. It's about 20 pips away, and you can use our FX momentum to let yourself know in real time whether it's likely to continue going up or whether it's not. Let's put the FX Momentum Pro on here. Shrink this down a little bit. So as this was breaking out, notice, first of all, during the chop here, many of the moves to the upside were greater than the moves statistically to the downside. This one started to go up again right here, broke out. Let's say you're long. When you're in a trade and you see the momentum going up, and this is not just the momentum for this particular chart, it's telling you that New Zealand pairs are going up against the euro, the pound, the Swiss, the dollar, the yen, obviously, as you can see on this chart. They're going up against most of the other pairs, and the yen pairs are getting weak. So you're buying in real time a breakout of a multi-hour sideways range, and trades that don't work, you're going to have a small loss. And trades that do work, like this one, this tells you that it's likely to continue its trend. So it appears that it might have run out a little bit of steam up here at the whole number, but there wasn't a whole lot of weakness. If you wanted to exit half your trade with 10 pips, that's fine. There it goes up to the fib target. A lot of momentum. Most of the time fib, I'm sorry, this is a fib retracement level. Most of the time those don't get broken on the first time up. So, probably want to exit half your trade at the minimum here. See if it can go up. It doesn't. Comes back down. You're out of your trade at the second half. So you made 15 pips on half, 20 pips on the first half. And that's how you use the currency meter. And we have a new tool that we're releasing that on a tick by tick basis gives you that same information. If you wanted to buy a breakout in a pair, this tells you on a tick by tick basis whether it's going up or down, to be used as an enhanced and faster timing tool for those who want to get in with more lots than they normally trade, or those who want to scalp and try to find 5 to 15 pip moves a lot of times during the day.